What's up, guys? Bill here. This is going to be part 3 of my 3-part series, How I Prepare for a Day of Trading. If you haven't seen parts 1 and 2, I'll link those at the end of this video. In this part, I'm going to focus on trade planning and risk management. I'm going to show an example of a swing trade and a day trade because they're a little different, obviously. And I'm going to talk about how I assess my risk to reward, find levels for entry and exits and profit taking and stop outs and all that. And how I manage the amount of total exposure I have of my account overnight on any given day. So let's jump right in. First example is going to be Redfin, which I'm looking to take a swing on to start next week. Filming this on a Saturday, the 19th. So I'm talking about next Monday, the 21st. Looking to take a swing on this name. So I first need to assess risk to reward, find out what this stock could potentially do, and if it's worth even taking the trade. I like to have 3-to-1 risk to reward on trades, if not more, when possible. Okay. So what I like to do is just look at previous movements the stock's made, get an idea of how much it can move and how long it takes to move. The time aspect is extra important if you're trading options, but obviously we can trade commons or options on moves on stocks like this and setups like this. So here we see that it kind of bottomed in August here, early August. It made a really nice move with high volume into mid-September, about a $9 move. So in a $9 move in 5 to 6 weeks, we know that's potential, right? And this is a name that has a lot of momentum and volume and has now started to pull back on lower volume, kind of undercut and reclaiming the 50 MA here and the 920 EMAs and potentially getting ready for another leg higher. So if we know it can make a $9 move in about 6 weeks and it's currently trading at just a little over 11, that means that there's potential that it could hit 20 in the next 2 months or so. Okay. I always like to give it a little extra cushion. And if I'm trading options, I'll give it a whole extra month. So if I think I've seen this $9 move happen in 6 weeks, I'm going to say, let me buy 3 months of time on my contracts. If I'm trading commons, I don't have to worry about that, but I'm still going to want to assess likely risk to reward, something that's feasible. I mean, you don't want to enter a trade like this and say, yeah, I'm going to hold till 50, and it's going to happen in the next 2 weeks, right? You want to be realistic. Okay. I think 20 for this name by January or so is realistic. Okay. So now if I know it can make a $9 move and I want to have at least 3-to-1 risk to reward, that means at the most I'm willing to eat a $3 pullback on this name. The less the better. So let's look at the chart, because I don't want to just say, I don't want to make it all about the math, right? Risk to reward is paramount. But that doesn't mean you just can take any trade at any time and say, well, if it goes up $10, I'll take a loss at -3 or something like that, with no reason other than just the math, right? I want my risk to reward to be built around chart levels. Okay. So we can see here that in this uptrend, we've put in a higher low. Here's our previous low. And on this day, we kind of hammered and a little bit more volume came in after some light selling days. This pivot right here is a nice place to risk off of, and it'd also mean that we'd be failing the 50 again by quite a bit. It'd leave us some nice cushion for this reclaim of the 50 to fail, okay? If we look at price, it's at 11.23. This level is 9.70, essentially 50-ish, $1.50-ish pullback, so not even quite 2. It's a nice cushion that you can use a daily close below this level, or maybe even a weekly if you want. I'd probably go daily and have yourself about $2 of risk for a potential $9 move up to around 20. 20 is a very nice psychological level. Okay. And a good place to target based on what we've seen, how this stock can move and the time it can move in. Okay. So, with options, I would probably look at contracts that would be definitely nicely in the money by the time that we got to 20. So maybe like some 15s where we're have our 52-week highs. 15s for at least 3 months of time, right? Maybe January would be great. Okay. I'm also looking for, let's pull up the options chain. I always want to make sure the delta is at least 25 as well. So here's the 15s for January. Delta's 34, really tiny theta, right? So you're not going to get eaten by theta too much. And some nice open interest, the highest open interest on the chain. These are the contracts I would probably play, okay? I might also play comments. I haven't fully decided on that yet. But that doesn't really matter. You just want to make sure that if you're trading options, you give yourself that extra time and you really check the previous moves of the chart out to make sure that your target is reasonable in the amount of time before your contracts expire, okay? So this is a way to build in risk to reward on your swings, all right? And with swing trades, you're also going to want to be aware of potential catalysts. So earnings season starting up again. This name had earnings August 6th, which means it's probably going to report around that same time in November. So we do have, this is August 19th, we do have about 3 weeks before it reports earnings, which is good. You know, it's usually not the best idea to start a swing a day or two before something's about to report, right? You can play earnings run-ups with a little bit of a cushion, usually a week or more. But just hopping in a brand new swing you're excited about just for it to potentially be destroyed on a bad earnings report, you know, that's just not fun. Also, you want to, you know, be aware of other types of catalysts like data and news and things like this that you can see coming, right? Certain news we can't. But this is a mortgage real estate stock. So things that affect borrowing rates like FOMC decisions or, you know, just the mortgage rates changing, or other types of economic data that comes out on a week-to-week basis may affect the price of the stock. So you want to keep an eye on that. And every sector and industry is different with what types of news moves stocks, what types of data. So you want to keep these things in mind as you're getting ready to take trades and while you're managing them as well. And finally, we're going to want to, you know, we're probably not going to enter this trade and just hold it without ever taking any profit all the way to 20, right? We need to pick places on the chart that make real, make logical reasons to take profit. What I look for is the same thing I'm looking for in support is confluence, right? So we can see here on the chart some nice areas of confluence currently that would be good scale targets. These GEX levels are also near other pivot areas on the chart. We see 13 is right near this daily pivot here, 1330. This area would be a nice place to take profit. This 15 GEX is near the 52-week highs at 1529. We have a big weekly pivot up here at 1768. And then finally, our final take profit area all out at 20 is how I would plan the trade. So by just allowing for a little, about $2 of risk, there's $9 of upside. Obviously, we're scaling on the way, so it's not perfectly, 9 to 2, but it's definitely 3 to 1, right? And that's great. Even 2 to 1 is acceptable depending on the type of trade, but you want to build this in and understand this before you enter the trade so there's no surprises and you can, calmly allow the position to work for you and wait till those targets hit or wait till the setup fails and we get that daily or weekly close below this high or low pivot and the loss of the 50 to confirm that the trade has not worked. Okay. Let's talk about a day trade. Now, with day trades, you have to be more precise because there's way less time, right? With a swing, a lot can happen. There's a lot of leg room, you could say. With a day trade, you're just able to execute for one day of the market, right? So with day trades, I will usually have two plans. I trade mostly inside day setups for my day trades. If you're not sure what that is, I have videos on it you can check out. But essentially, I'm going to have a trade plan for a breakout and a pullback and retest of support. With an inside day, those key levels are usually your previous day's high and low, okay? And in these situations, it's very important to know what the average true range of your stock is, the ATR, and what it's also capable of doing on kind of an outlier or big day in either direction. And it's very important to try to find support confluence if you want to play the pullback, and to help you find what your risk levels should be. So here's Pan W inside day. And some things I like about this setup is that we have a lot of confluence below for potential support for entry and then risk areas. So right here at previous day's low, we have this large dark pool. This stock has made, has seen a couple big days of dark pool activity. It started on the 15th at closing price, where it printed this dark pool that was quite big at the time, 300 million roughly. And usually in that case, after a big move like this, and you see dark pool at close, and you see all that volume that came in off the dark pool, usually I'm going to think, okay, this is probably some distribution, and people are taking profits after a really nice move up. Then the next day, though, even more dark pool came in, double the size of the previous day at close, after kind of a wild flush day that printed a hammer on the daily. And then the next day, we went higher, closed over both the previous day's dark pools, and this next day, again, another close over the previous day's dark pools. And look at the volume dry up, right? This Friday's volume was the lowest. I couldn't even find the next lowest day. That wasn't a half day of trading, right? There was less volume on the day before the 4th of July, but that's a half day. I couldn't find less volume than this. So this name, I think, I could be wrong, but what I first thought might be profit taking or a potential new short or distribution or something like that, it might actually have been a little bit of a reload here on the second day, bullish dark pool action. So this level, let's go down to the 15-minute. We can see how well it's been respected. So here's the day where that first dark pool came in. And you can see the big sell, and then we came back and price closed right at the large dark pool. Okay, so they had this day where the smaller one came in at close, and then the next day the big sell-off, kind of like a shakeout, maybe a shakeout attempt. Price gravitated back, then they printed an even bigger, double the size DP here. The next day, some volatility around the level, but eventually a run into close and a close higher. Friday, again, some volatility off the open, but eventually holding these dark pools. So this large one's right down here by the previous day's low, which is nice confluence, okay? A little bit of a dip below here, a sweep of that level down towards the previous day is a nice entry spot for this trade. And what makes it even better is if we think about Pan W and the fact that it has an $8 ATR currently. ATR is the last 14 days of price action, and it's a dollar amount. So about an $8 ATR right now. Where'd we close at? 375. Let's call it 375. So if I get in down here, and now we also have this positive GEX level that's acting as support on the daily. See all these wicks down to it and below and closes over, and the 9 EMA coming up. I get it around a previous day's low and around this dark pool. I can take a $3 pullback as long as price holds here. And on a stock that has an almost $9 average to range, 8.8 exactly, $8.80. All right. So a $3 loss on a stock that has a $8 range. And that's just its average. So you're looking at 1/3, okay? 3-to-1 risk to reward. And on an outlier day, on a nice big breakout day, look at how much it can tack on. $17 gain on that day. $7.75, $6.50. Just in profit, not even the actual range. The ranges are more like 10 and bigger on some of these massive days, right? And we're coming out of contraction here. What happens before expansion? Contraction. So because the price is so tight, we are giving ourselves a higher probability of catching a day like this. So we'll pull back down here, allowing for maybe $3 of risk. You know, a $10 expansion off this level is possible, which would put us up at, 82. It would be making new 52-week highs on the stock. And we have our largest GEX pulls above and all of these things, just sweetening the deal a little bit. Now, what I like to do, if I get this dip, is obviously, like we talked about in the swing setup, I'm not going to be holding the entire position for what I think the biggest possible move is, obviously, right? We want to take profit ahead of time. I like to take profit at a place where the ATR is getting hit. So if I'm getting in down here, I'm going to be looking to take, some off the table at the high. That's a $4, maybe more move, depending on how far we go, how far we pull back. My risk level is 370 to 376, $6 move. That's, 3/4 of your average true range right there, ATR. We have the top of this flag right here, which is 378. That's an even 8. That's your whole, average ATR right now is this range from our stop out level up to the top of this flag, right? So I'd be trimming here. Here's 52-week highs, a place that could potentially be resistance, right? Trim there. And the idea is you want to lock in the majority of your trade when you're starting to max that ATR out and then hold a smaller position to catch the outlier move. So if it does end up being a day that looks like these candles, then we still have some contracts left to sell up here, up at that max, maybe $10, $11 move up here, right? So that's kind of how I go about the day trades. And that's just the pullback entry, right? So some things that would change if they don't pull back and the stock just breaks out. One, I would probably take a little bit lighter size. Why? Well, we're a little extended from this 9 up here, right? Now, if it was a pullback and we're starting to get down here and my risk level is this GEX with the 9 catching back up, that's a little different. But if my entry is not going to be until we break this 376 level, now we're a bit extended, right? So I'm not going to count on as big of a move and size as heavy on that type of entry, okay? So also, what's your risk in this scenario? If we enter at 376 on an inside day breakout, one way you can play it is simply if that level gives out, like you break over it. Let's drill down to the smaller time frames. If we traded this tomorrow or on Monday and we get some confirmation up here, we come down, retest it, we take our entry, stock moves up, and then crashes back down and closes down here, you might want to you might want to stop out. But again, we need to decide how aggressive we want to be in terms of our risk management. We're willing to take about a $3 pullback, $2 to $3 on this stock because we know it can average range of $9. So what's about $2 below 76? This first dark pool. All right. $3 below is your second dark pool. So you could build in that type of risk to reward in this trade and just kind of say, okay, if I want to be super tight risk, I'm going to play a close back below 76 and just take the loss, and then maybe it'll reclaim it and I can re-enter. If I want to let it work a little more, I can see if it'll hold this dark pool. If I want to really let it work, I can see if it'll hold this. And that's still just about a $3 pullback on a stock that if it breaks out over 376 and it has an ATR day of an $8 or $9 move, we're closing here at 375. That's going to get you to 383 on a day that looks like this, where you essentially open and head higher and close at the highs, right? Without, a whole lot of stress. That's a 375 to maybe 383 or so up here. move, right? So you can eat a $3 pullback and still have decent risk to reward, especially a $2 pullback. So all these things, my major point is, you don't just want to enter the trade because of the setup and not think about this type of stuff. This is what's going to help you hold longer because you have realistic expectations. It's what's going to help you stay in trades when they're volatile and kind of moving crazy, because you know that you can handle a certain amount of loss on this trade that has nothing to do really with P&L or a percent that it's pulling back. It's the chart, right? We're using the chart to discern our risk, okay? So sometimes a logical risk on a stock is going to be a pullback that on the contracts might seem crazy, like 60% or something, especially if you're trading weekly contracts. And so you need to look at the contracts ahead of time and say, okay, on these, if I play this breakout and I know I want to use this dark pool as my risk, that's a $3 pullback, what would that look like as a loss on these contracts based on the delta, based on the theta and things like this? You can use option profit calculator to really get a good idea. But you'd look at the delta, you'd say, okay, if I eat a $3 loss, that's $1.50. What's $1.50, minus 545, which is the cost of the contracts right now, and find out if that percentage is tolerable to you. And if it seems bigger than you're usually going to take, then just size smaller on the trade so that the end result is the same dollar amount. Like if you never want to lose more than $1,000 on a trade, then just use smaller size so that you can allow for the bigger percentage pullback, and it's the same dollar amount of loss. People get way too caught up in percentages, and they're watching their P&L and their open P&L like a hawk all day, and every little fluctuation causes them to overthink things, sell too early, stop out too early. All right, make these errors that have nothing to do with the price action and the chart levels, which are what's going to help you stay in trades both before you stop out and when you're trying to take profit. And then finally, let's talk about how much exposure you should have to the market at any given time. The way I decide that is I watch SPY every day. And if you go back to part 1 of this video series about analyzing, broad market sentiment, that's how I do it. Obviously, the most you can have exposure is all of your account in the market, and the least can be 0% of your account being all cash at any time, right? Some people do that. Some people, when the market's really hot, they'll just be fully invested. And when the market's really bad, they'll be all cash. I usually am somewhere in the middle. You also have to keep in mind that options and commons exposure are totally different, right? Options way more volatile, especially depending on how much time you have until the contracts expire. And going super heavy account exposure to just options is very dangerous, right? You never know when you're going to wake up and there's some crazy news event that has happened and the market is in trouble. And having a ton of options exposure, heavy account, can really do damage, okay? So, I think the heaviest I've been exposed lately is about 75% of my account, total account. And I try to make it 3 times more exposure to shares than options. Okay. So if I have 75% of my account in the market, 75% of that is going to be commons. All right. And it fluctuates based on what SPY's doing. So using the Keltner channel, if we start to get really hot and get up by the top of the Keltner channel, I'm naturally going to be in positions that are probably performing well, and I'm taking lots of profits. And I'm going to be locking things in and saying, okay, now I'm down to maybe 25% exposure, because I know that most likely what's going to happen is price is going to need to cool out a little bit and revert back towards these shorter term moving averages. And then I would be looking to load up on new merchandise again when it pulls back here. When you're somewhere in the middle like this, I might have half my account because I've loaded up down here and we've made some money taking profits all this way. Some things fail and stop out on a nasty day like this, and that limits your exposure again. And then things start to get tight and the EMAs catch up and you start to add more things, right? It's a constant ebb and flow. Okay. Just like with swing trading, you want to be aware of catalysts, for the broader market that can affect price, CPI and reports and different, data, unemployment and things like this. And earnings are coming up. When big names report, it can really move the market. When Apple and Amazon and Google and Microsoft and all those names and Nvidia start to report, it can really move things. So you might want to limit exposure or be more strategic in where you're placing your money, what types of sectors and industries you're adding more of or removing size from. And I like to make those decisions every day about 15 minutes before close. I look at the daily charts because then I can see what that candle's going to look like. I can get a sense of the volume for that candle as well. So has the candle closed below a risk level? I need to cut some stuff. Is the chart setting up really nice and look like it's contracting and ready to expand soon? I can start a new position. Are we ripping higher and this day is an outlier day for this stock I'm holding and it's up 2 times, 3 times more its average? I need to take a bunch of profit. All these decisions right before the close, constantly, cross-checking, cross-referencing with SPY and saying, okay, we're extended on SPY. I need to get my exposure to the market down by quite a bit. What can I sell more of, right? And a lot of this takes care of itself the more you do it. It doesn't have to be so calculated, and literal, because you're just naturally taking profit on your individual names as they move and they hit your targets. And on bad days, you're naturally going to be stopping out of some stuff, whether that's for a loss or just trailing a stop that gets hit and now you're finally fully closed out of a stock. All that type of stuff, guys. All right. So I know that's a lot to think about, a longer video. Hopefully it helps. If you have any questions about anything I discussed in this video, just leave a comment or question and I'll help you out. If you're new to the channel, please like and subscribe for more content like this in the future.